Alright, supply and demand. Finally making a video. We're going to go over quite a few things. Um, and I hope this is going to give you some insight to what supply and demand is and how I use it in the markets. Supply and demand, when we talk about supply and demand on a price chart, we're looking at areas where price has stopped and proven to us that there was an imbalance there. Okay, so turning points in the market, where price stops, like up here, price stopped up here and turned lower. That tells us for a fact there are sellers here. Why? Because price could not get any higher. Okay? When we look at the formation of a zone, we want to see um, what price did coming into it. So we had a large rally coming into it, and what price did going out of it. We had a large rally down coming out of it. That tells us the sellers in this area, we don't know exactly where, but from the high to somewhere in this area, the sellers created such an imbalance in price. So that tells us an area that the big money in the market is executing orders. That's a fact. The smartest and the richest people executed orders right here. I mean, who else would turn the market like this, right? So that's what these areas of imbalance are telling us. Um, Another thing that makes a good zone or a bad zone is how long did price stay there. If we look at this area right here, we kind of chopped around here a long time, right? If we look to the right more, we see how this area really didn't offer much resistance. It offered a little bit of chop, but definitely not a good long trade, right? That's because we spent a lot of time in this area. Up here, we spend very little time in this area. We spend two candles before we go the complete opposite direction. So that would be a quality zone. Another thing that makes a strong zone is how many times has it been tested. Unlike support and resistance, the more times something gets tested, supply and demand is the opposite. The more times a zone gets tested, the more orders are being filled there. So if there's a sell imbalance in this zone up here, when we come back into it, we're filling more sell orders. Therefore, there's less sell orders in that original supply. So it's weaker. Um, so in the markets, price will move from buyer to seller, from buyer to seller. And it does that on repeat. But not all supply and demand zones are important. I mean, some we can just straight up ignore. And I think that's where a lot of people get caught in the weeds is they look at this chart and they look at every single zone and they're just like, well, this is just ridiculous. So let's see how we can narrow it down and also how I draw zones. When I'm drawing zones, I'm I'm looking to where the imbalance started. So really the imbalance came from the close of this candle. So, but that's kind of a tiny zone. I want to find a good mix between, a full candle of risk or a partial candle of risk, depending on how the candle forms. So here, I would use a whole candle because that's about a good size risk that I'm willing to take. On this next supply zone here, let's zoom in, I wouldn't draw to the whole candle here. You could draw to the close, but I would use the previous demand candle or the previous up candle to draw my supply here. And I would even bring it in to the open like that. Now that's a size zone that I can deal with. Here, price stops. So the zones are always drawn from wherever price stops. That's at the top. And I can choose the bottom here. I can choose this open and close area. Or I can just choose the wick, depending on my risk tolerance. I personally will use that whole candle. Here's another weird shaped supply zone. You could draw it using the whole candle like this, or a little bit higher. But a zone like this, I will definitely bump it up. I'll either use the wick or the previous body's open and close. For this one, I might use the wick. These are just areas. We want to be as precise as we can, but we also don't want to discount um, the area where the imbalance could be, right? That's a few examples. Let's look at a couple weird ones. So down here, for instance, this demand zone, we draw it from the bottom, and you could draw this whole candle. But the way price formed up, we came up and we actually formed more demand right here. So actually what I'm going to do with this demand zone is just bring it up to this demand also, just to include it. That would increase my risk slightly, so I might size down my contracts for that zone. This zone is pretty small. I will use this whole candle just because that's a reasonable risk. This is a pretty large supply zone like this. I would definitely bring it up. I would probably use the wicks. Okay, so when drawing the zone, the high or low is always going to be included. The high is always going to be included if it's supply. The low is always going to be included if it's demand. And then it's really up to you what your risk tolerance is. I like to find, on candles like these, it makes sense to use the whole candle. Up here, this whole candle, this is a primary supply creating this down move. I kind of want to include a little bit more, so I'm actually going to drop it down to there. So don't worry about being so precise with your zones. Just knowing what the zone is telling you is what's important. Okay, so that's what we're going to look at next. So starting from this downtrend on the left, we see supply forming. In a downtrend, supply will hold 70 to 80% of the time. It has to, because we're moving lower. Supply has to be stronger than demand. That's a big piece of information to know. The trend on your trading time frame can be very important. We see how our demand levels just do not hold the whole way down. Okay, and how can we tell that? Why? When this demand forms here, it forms on this up candle like this. Why wouldn't we buy this, right? If we look to the left, we had a nice bullish run. Why wouldn't we buy this demand? What did this demand accomplish? Well, it just sent us right back to sellers. That's it. And then we came right back to it. This demand did not accomplish anything. Same with this initial one. On this up candle, this demand forms. Am I just going to take it? No. We want the probabilities to be on our side. So also, let's speaking of probabilities, here's a couple things. The lower or the further, the cheaper price gets, the more likely demand is to step in. The more expensive price gets, more likely supply is going to step in. So the originating supply and demand is always considered the strongest. That was the market turning supply and demand. As you go higher or lower, it gets weaker. So as we start coming lower in price here, our supply starts failing a little bit. So you really want to be in the initial supply retests. As you start going down, they're more likely to fail. Now let's look, how could we have let me see here. So what matters in the market are the orders that are placed. Meaning, once price goes through a level, once price goes through any previous candle, those orders no longer exist. On these up bars here, anything to the left does not exist. Okay? That's something you have to keep in mind. And once we start breaking levels, they're gone. They're done. Okay? Let's look how price moves from buyer to seller. We'll start down here. Demand forms here. We move up and break this supply. That's our first sign that buyers are coming into the market. So a retest of that would be a buy. Now let's say, for instance, you didn't get this first retest, and this demand forms here on the sub candle. Would you buy this demand? Are these the buyers in the market? What does this demand accomplish? It just sent us to the sellers, and then we came back. So if you ask yourself, I'll link it in the description, to think outside the candle, where are the real buyers? Well, price came up, came down and removed buyers to this point. So if you missed this initial entry, the buyers are right here. So that could have been your next entry long. As we start moving long, we already tested this supply once, so it's weakened. So, and if we're starting an uptrend, supply is most likely to fail. So we go through it. Once this supply here is broken, this is what we see. On this up candle here, what's our expectation of the market if the market moves from buyers to sellers? Up here. Okay, on this up candle, we're expecting up here. So we want to get in on a retest. We want to get in demand, and we're not going to sell until it gets up there. Okay, that's exactly where we go. Now, when we hit it, we don't just sell off. Why is that? That's weird, right? It's supply, we should sell off. No, all supply means is there's sellers in the market, right? Price paused, created more demand, and then we went through it. I'm referencing the thinking outside the candle video again. Where are the sellers in the market? They're here, boom, 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 above here. I think this is kind of a long video. I think I'm just going to be part one. We will go over the next video how to more break down zones and how to use it to trade and multiple time frame. So I hope that helped. And let me know if you have questions.